recipes for technical trading success in Cook's Kitchen.
All right, AMC apes and AMC fans, let's take a look at the thing again. My title today is Panic at the Casino, but I'm not saying that this isn't about AMC falling off a cliff. It was all the FUD that I got for the video I did last week and the stuff I said on Twitter and StockTwits. A lot of fearful reactions, and I'll address those. Let's take a look at the stock, which is like really screaming today. Had this nice dip to 40 last week, which was gobbled up. A little pause and refresh here, back down to 52-ish. And, so a couple days ago, let's see, today's Thursday. So, a couple days ago, sellers above 60. Who was selling up there? Were there apes selling up there? We don't know. But, now trying for 60 again, trying for those highs. So 63. Still the highest daily close up here, I think it was, that was 62.55, the highest daily close. Yeah. So still trying to get through there. May do it. All right. And, the more I learn about the different players involved here, the more respect I have for what some of the people are doing. I'm still going to express my concern about what happens to a minority of very inexperienced traders when this thing ends, because short squeeze, it's all good, but it's mathematically impossible for everybody to profit, especially if their average cost basis keeps rising. If you got people adding above 50, adding above 60, their average cost basis is rising. Not everybody's in at 10. So it will be hard for everybody to get out safely. Now, we'll talk about valuation. We'll talk about the market manipulation of naked shorting. Let's just go through some of the things that I dealt with this past week, but in terms of addressing the fear and uncertainty. First, my beliefs and biases and potential blind spots. I'm a huge student of behavioral finance, behavioral economics. I have a podcast on it and have studied it for years. Daniel Kahneman, Dan Ariely, his book, Predictably Irrational, I highly recommend. And it's about how people make decisions under uncertainty or with risk. Well, so since I talk about people's beliefs, biases, and blind spots, let me just share some of mine. Number one trade can make you rich, but beware that the method may not be repeatable. Number two, trading is one of the most difficult professions. It is entirely about managing extreme randomness and frequent failure. Over 95% of new traders fail, and some fail repeatedly and have to basically leave, unless they can keep funding a new account. Number three, your brain wasn't made to trade. And this is, if you want to learn what I mean there, just go to the top of my Twitter feed and you'll see my pinned tweet I reposted on Medium an article that I had published in 2008 about your brain on risk. It was called Mental Models of Financial Sabotage. And my idea was, what can you learn from rogues who take down banks, and also from market wizards who are really good at what they do? And so you can, if you go to my Twitter feed, you just click on this link, it'll take you right to it on Medium, where I summarize the research I did in the 2000s as a professional currency trader, and reading the literature on behavioral finance and neuroscience, combining what those two sciences from the inside out and the outside in told us about our brain on risk. All right. So that's my thesis. Your brain wasn't made to trade. but obviously our brains weren't made for a lot of things, like flying airplanes or doing brain surgery, but we can train our brains to do them. And I'll come back to flying and surgery in a minute. You can train your brain and emotions to handle the randomness and volatility if you develop rules, routines, and systems for decision making. Final belief here is that the great financial crisis was a great injustice where banksters got bailed out. I understand that part of the ape movement is, hey, we need to show Wall Street that we matter, that we see corruption at all levels. It's not everybody on Wall Street, but I share some of that sentiment because I felt like I was mad for years after the 2008 crisis where nobody went to jail. The banks got bailed out, businesses got saved, and nobody went to jail. So I share your sentiments there. All right, let's see what apes got so mad about the stuff that I wrote last week. So I've got answers to the most burning questions. Here are some of them. You're just a paid shill, aren't you? No, I'm not paid to write anything that I write to have any particular view. I can say whatever I want. How short are you, AMC? I'm not short at all. Never had a short position. So, in fact, I've said many times that my son had a small, long position, and it worked out good for him. And that somehow I'm protecting my buddies at Citadel. Listen, I used to work for a very large prop shop, trading house, bigger than a prop shop, actually, in Chicago. Would come across people at Citadel, but really, even if I knew somebody there, they wouldn't be telling me what they're doing. So no, I'm not protecting anybody there. All right, more questions. Don't you know, this is what the apes are saying to me on Twitter and StockTwits and elsewhere, that all we do is deep due diligence. That's what I hear. But that due diligence is focused on, naked shorting and what's the size of the float and the size of the short positions and what's going on in the dark pools. I get that. I've been focused on this one aspect about how if you have a movement of 5 million people or 10 million people, that there will be a not so insignificant minority, possibly 100,000 people, who could get hurt by this. People say, don't you know who Wes Christian is? Like, I'm being shamed for not knowing who Wes Christian is. Sorry, folks. I don't know. I didn't know who Wes Christian is. I know a little bit about him now. I've watched this video on Fox a couple of times where he made an appearance. Apparently, he's done some litigation against some of these practices. Hey, listen, I know of a lot of people, and Wes Christian never came up my radar. And so mainly the people I focus on are hedge fund managers like Steve Mandel of Lone Pine Capital, Andreas Halverson of Viking Global, the guys at Bailey Gifford, and then CEOs. It pays to know who your CEOs are. If you're tracking 100 different companies or maybe 200 different companies, you have to keep track of a lot of CEOs. And so those are the rock stars that I tend to focus on. All right, don't you know what a short squeeze is? Obviously, I know what a short squeeze is. Why do you hate this movement that can help people? I don't hate the movement. I was just pointing out this one thing, and then it just snowballs into this argument, and nobody hears what I'm trying to say about a small minority, a not so small minority of people in terms of, like, picture 20,000 to 100,000 people that could get hurt when this all ends, and it will end. So why should we believe you really care about us? Well, maybe you will after this video. I don't know. I'm just answering these questions now, but and I got something like this. You must really hate poor people and Marines, don't you? Apparently there is a Marine who is an ape, and he was on, I think he was on Steve Bannon's show, and just sounded mad, like that, people are against the little guy and the little guy having a shot. I'm not against the little guy having a shot at all. I mean, I came from nothing. When I first came into markets in 1994, I took a job for $6 an hour part-time just so I could learn about the markets. And I had 3 kids at home, so I know what it's like to be poor and struggle to get up in the markets. All right, let's keep moving here. I think I'm almost through. Oh, well, yeah. I've answered the burning questions. So, yeah, here's some of the things, the terrible things I said that made apes so mad on Twitter, etc. I said things like, AMC is not worth 10 times sales, trading as big as Viacom. Viacom's market cap is between 27 and 28 billion. And today, with AMC over 60, probably over 30 billion market cap, it dwarfs, well, it doesn't dwarf, it has exceeded the market cap of Viacom. Do you know what Viacom's revenue is? Viacom's revenue is now smaller than AMC's market cap, because Viacom's revenue is about, let's say 27.5 billion, maybe 28 billion. So basically Viacom trades for 1 times its sales, and it's got content. Why should AMC trade for over 10 times sales? That's the thing I keep saying. I know, valuation doesn't matter, but we're going to come back to that, because when the short squeeze is over, valuation will matter. I said things like trading is a solo journey of your mind versus the market ocean. I said short squeezes are great, but nothing to build a sus around. And sus is my abbreviation for the system underneath your system. It also implies sustainability. So a sustainable underlying system must be in place to take lots of trades in thousands of stocks and be able to repeat your results with a positive expected value. If you don't know what positive expected value is, take a look at the expected value of roulette, and why roulette, hey, it doesn't seem like the house really has an edge there, but over the long haul, they get 5 cents of every dollar that gets bet. And so you have a negative expected value going to play roulette. If you end up with your average loss size as big as, or only a little bit smaller than your average win size, over many hundreds of trades, you will have a negative expected value. So we can talk more about that later. You can't hurt hedge funds. I said something like that. I said, you can't actually hurt hedge funds in my article. Even if you could, it's not be worth it. I might walk that back now that I see that, that you guys may really be able to put the wood to a citadel. We'll see. All right. So pardon my valuation call. I really care most about the distribution of skill. And that's why I keep talking about the 20,000 to 100,000 people of low experience who may not know when to get out. And it just the law of large numbers makes it realistic. If there's 5 million apes, there's gonna be 20 to 100,000 who don't get out as well as the average. And so I want everybody to warn them. I'm warning them. I would like fellow apes to warn people how to play this safely. So a little bit sarcastic here. I say everyone's long from 10. No, because that's not true. Not everyone is long from 10. People are raising their cost basis average as they buy more above 50 and 60. So I admit an army of apes could hurt Kenny Griffin, but some grunts in the war will come out wounded. The soldier apes among the millions. So we're going to look at the distribution of skill in a competitive game. And you could look at it for any competitive game. I picked one in particular that's easy to look at. All right. So here was the thread that I posted. It was actually something I did on StockTwits, but I linked to it on Twitter. A lot of people saw it. Charlie Gasparino retweeted it. I know Gasparino is one of your enemies now too. Apparently he works for Ken Griffin. Neither of us are on his payroll. But you should look at this thread and then just go through the logic that I tried to share with somebody. And I said, I try to explain that the group of inexperienced investors who could get fooled as many thousands. That does not say that all apes are inexperienced. It says that I'm saying that there's a small minority that are inexperienced, and that the size of that group could be many thousands. All right, so read that thread and then get back to me. And I never said that apes were dumb. It's like this war on Wall Street is that all of Wall Street talks about the dumb money, and that apes must be dumb. First of all, I'm not saying that, and professional investors listen, in my business, and I've been trading for 25 years. When you talk about the dumb money, you're talking about people who chase new highs that probably aren't a breakout, and we're never buying when things were on sale. They're typically and traditionally buying high and selling low, and that's why I say 95% of new traders fail. All right, so I do surrender on these points. The big short squeeze may indeed hurt Kenny G and other hedge funds. Listen, if this ape movement does result in the SEC, enforcing naked shorting in, some better way, the thing is, you have to hold the brokerages and prime brokers, super accountable, when there's so much liquidity. And I even heard, I heard Wes Christian, didn't really explain it well when he was interviewed on Fox, that, the whole idea of selling short is that the shares have to be available. So the broker, the custodian for those funds, has to be able to find shares to allow somebody to short. This is that you're actually borrowing the shares from somewhere, from an account, and then they have to pay interest. Yeah, if this ape movement results in the SEC finding better ways to enforce, and basically they'd have to get the brokerages to enact new custodial measures to make sure that naked shorting can't happen, that'll be fantastic. All right. And if the ape army creates a nation of education for investing and trading skill, man, I am all on board. I teach a class called PROP, which is probability, risk, and optimal profit. I've taught it for 20 years to traders, and I've offered it free to vets and people with not a lot of money, and perfectly willing to do that at any time. It's something we can do online. All right, so let's talk about the distribution of skill. This is from chess. Okay, whether or not you like chess, it was one of the better graphics I found about the distribution of skill. I didn't like the one for golf because it's about handicaps, and then you're sort of talking about a derivative with handicaps, and so that made it confusing, or tennis or SAT scores. I thought this was a pretty good graphic to describe that. Hey, the majority of your average player is going to be in this range, this 65, 68% area. And so they're intermediate, and there's strong intermediate to the right, and then weak intermediate. And this is the average, right? As you move higher, you get more skilled players, all the way until you get up to a strong expert. And this was what I described as the distribution of trading skill in that thread that I showed you before. This is the thread. So when did I publish this? On June 13th at noon. Please go to this and read it and try and understand what I'm saying, that whatever the size of this population is, if it's 1 million apes, if it's 5 million, if it's 10 million, that equates to a very small minority down here, let's say 2%, that probably will not get out of this very well. And so I'm worried about those people. Okay. So if that's if it's a 5 million ape strong population and AMC goes to 100, and some of those people have a cost basis, higher than 70 as they buy into it, when this thing comes down, it's going to come down fast. And so anywhere from 20,000 to 100,000 people could get hurt when this thing comes down fast. So that's been my basic message. All right. So when I debate this with people on Twitter, first read the comments below. So this is Narwhal saying, "Hey, beware the bell curve. This guy's trying to tell you how to think." Here's a bell curve to frame all up my false analogies to feel real. So the guy says he works in data, and that I'm trying to fool everybody. Listen, I'm not trying to fool everybody. Talking about a distribution of skill, So I asked him, are you average or above average? And that means that in a population, there are people below you who have a lot less skill in one of the toughest games. All right. Speaking of one of the toughest games, I mentioned pilots and surgeons, who I have tremendous respect for. I said that trading is one of the most difficult professions. I put it below, in terms of difficulty, I put it below being a pilot or being a surgeon. The reason is because both of those require extreme skill, but they also have people's lives in their hands. Pilots and surgeons hold people's lives in their hands. So trading's not quite as serious. You're just holding your own money. It's still difficult, though. I wrote this for my dad in April. My dad passed away April 11th. He lived a good, long life. He was 87. He was a pilot. He taught me to fly an airplane when I was 15 years old. And I did not make a career of aviation. But I realized in my 30s, when I made markets my career and I became a professional trader, that so many of the things that I learned from flying helped me become a better trader. And I had written him a book when he turned 80 that I called Flight Plan for Trading. So in this article and podcast, which you should just be able to Google, I just review some of those lessons about what learning to fly an airplane taught me about being a better investor and trader. So that's, another element of the distribution of skill and why training matters. All right. Here is sort of a summary article I wrote in 2011. I just found this. I just Googled it. It was on thestreet.com. In trading, we say you have to have an edge that is part of a repeatable set of strategies and processes. Here's an article I wrote in 2011 to explain this concept and the one mental edge anyone can learn: probability. All right, so check that out if you can. All right, so here's some of the random comments that I still see on StockTwits and on Twitter. Just buy and hold. Simple. They are trying to break our spirits. They're not going to break us. Let's buy and hold. Okay. I keep attacking that because I'm worried about the inexperienced traders who hear that and think that they're definitely going to win in this war with their own money. So, those are the things. This is the kind of irresponsible posting that I try to address. And here's another guy who says, it's embarrassing that I don't know who Wes Christian is. So, sorry. I know who Matt Kors is now. I've talked about him. Matt's a young guy, but sounds like he's learning really fast. He's, he thinks that there is a viable campaign to end naked shorting, to end pattern day trading restrictions, to end the dark pools. But the idea that you should have the same freedom to buy in and out of your trading account, just like you're at a casino. In a casino, you have to have cash. In your brokerage account, stuff needs to settle. So the idea that you should be able to trade in and out, in and out, in and out, if you haven't, proven that you can handle that liquidity, needs to be addressed. All right, let's keep moving here. This guy. All right, just learned about him. Bright guy, Dave Lauber. I think he was on. He was actually on Matt Kors' show. So here is Dave Lauber. Hey, look at this guy. Here's Noah. Noah keeps showing up for me to follow him because I probably had so much engagement with him. He was actually, I think we had some good conversations about all this. So, but here's Dave Lauber, if that's how you pronounce his name, Lauber. And this is a smart guy. He looks like he works in technology and finance, but he says he likes to talk about market structure. So I'm assuming he's got a background. He's got a background where he can talk about market structure. And I thought this was a good analysis here because the title of this article from the Wall Street Journal is just absurd. The SEC takes on retail traders. Yeah, it's confusing. It's confusing the elements that are actually part of the real story, and that's what Dave points out here. But one thing that so Dave was on Matt's show. I have not watched that interview. I should look for it. I don't know if it's part of like some 7-hour thing or if he shortened it. If there's a short version of the Dave Lauber segment in the Matt Kors show, someone please send it to me on Twitter. All right, so this was a great thing that Dave said, and this ties in with my beliefs about what it takes to become a trader. Dave says, I'm often asked for advice by aspiring traders, and my response is always the same. Don't bother. Most don't have any edge, and those that think they do generally don't. You're much better off as a long-term investor than as a trader. Now, so again, this is now if an ape says, hey, listen, I am just an investor in AMC, that's fine. But if this is a short squeeze, that's not an investment thesis to build an investment around, right? And so then really you are a trader because you're trading you're not trading the long-term fundamentals of AMC, because if AMC goes to a 30 billion or 40 billion market cap when it's probably only going to do 3 billion in sales this year, it is overvalued by any measure. So really, you're just trading the short squeeze. You're not really an investor. I get that the whole thing may have saved AMC from bankruptcy, from $2 up to $10 or $20. But, then it was saved. It could do capital raises at $20, and did. So the company is no longer facing bankruptcy. So that war was won, you could say. So now it's just a trade for the short squeeze. And so people need to be aware of that. Steve Goldstein, you should follow him. Alpha Mind 101. I've had him on my podcast. The guy is very sharp, and he posts stuff on Twitter all day that is they're just golden bombs about what it takes to become a trader. He also talks about things like the distribution of skill, but he doesn't call it that. He'll just talk about, hey, do you realize what it takes to be a professional athlete? And do you realize in the markets you're basically playing against professional athletes? Any level of skill in anything, whether it's musician or artist, it takes years of practice. So, here's what he says. There's delusion, there's gross delusion, and then there's people who think I'll become a trader. He says, get real, take your time, learn before you earn. It's so much harder than you think. So much harder. All right. So here's another. Oh, yeah. Here's Noah. Here's Holdings Yolo. He says, we were obviously in the middle of a discussion. He's talking about the full concern for inexperienced investors is a guise to keep people from doing what they want. Yeah, that was really my intent, to talk about I'm worried about a few inexperienced traders, and I'm trying to keep them from doing what they want. That's absurd. I'm just talking about the fact that a small minority, whether it's 20,000 or 100,000, will probably get hurt. And we don't know who they are, but it's just a matter of the law of large numbers. He says people who lose in the stock market, it's a reality, but they should be able to make that choice for themselves. Of course, free country, man. You are free to open an account, and it's never been freer. This is the thing. I hear this on Fox News when I watch these interviews, like, oh my gosh, they're taking the markets away from the little guy. Are you kidding me? There's never been more access to markets and stocks and different asset classes and the ease of trading. Oh my God. You don't know what it was like. Before the smartphone, you should have seen me trying to trade options on some little stupid Nokia phone I had 20 years ago. Oh my gosh, it was so painful. So things are great now. You have more access than ever. And but what I wanted to point out to him here is, okay, I agree what you're saying about, don't, let the little guy trade. Of course, let the little guy trade. But let's remember how real money is made, Amazon, Apple, Google, Microsoft, Shopify, The Trade Desk, Align Technologies, the clear aligners, dental teeth straighteners, Intuitive Surgical, NVIDIA, Square. These wealth building machines were not based on an army movement. Okay, so people need to, if you're going to call yourself an investor, this is the kind of due diligence you need to do. So again, I'm just trying to differentiate that some people just haven't learned investing yet. And if they think that this is a repeatable strategy. All right. So Gen X Ape, he wanted to say, oh yeah, I'm pretentious, I'm condescending, and I'm trolling. I'm just sharing my opinion, and if I have to clarify my opinion because people misinterpreted it or didn't read the article, if you want to call that trolling, okay, go ahead. Yes, humility is respectable. I have some, but I said I really am trying to help. Or do you abhor the free exchange of ideas? Maybe he does. I don't know. So, in conclusion, smart apes ask great questions. Such as, if we get AMC to $100, worth over $40 billion, what will we own? I think you need to ask yourself that. What will you really own? You're going to own a movie theater with no content, right? It's just a venue, trading at 15, 20 times sales. So that's what you're going to own. Is that a good investment? Or do you just plan to sell the top of the short squeeze? There's people selling above 60. You don't know who's selling above 60. You don't know if some apes who are long from 10 are cashing in some chips, while at the same time they are posting on Twitter and StockTwits, stay long, stay strong, keep buying. All right. Hey, speaking of content, Amazon just paid what, $8.5 billion for MGM? Thousands of movies and thousands of hours of content. They paid $8.5 billion for that content library because they recognized the value there. Okay, think about that when AMC is trading for $30 billion with no content. All right. So apes, ask yourself, can we all get out safely once the squeeze is over? What if this goes down a whole lot faster than it went up? I actually think it will go down a whole lot faster than it went up. I mean, it's just how these things work, how all sorts of bubbles and short squeezes work. Speaking of bubbles, I'll show you. I know a couple things about short squeezes. Let's look at one I just participated in. I actually bought this company for its fundamentals because I thought it was undervalued. So we were buying at like $4.50, and then a short squeeze happened, and we sold above 20. Now, I wish I would have gotten back in because this company is they're involved in central nervous system treatments, and they have a candidate entering, I believe, phase 2 trials for major depressive disorder. So a lot of exciting companies. We just saw Biogen ramp up on its approval for the first Alzheimer drugs. So there's a lot of opportunity. Where else did we just participate in a short squeeze? I can't remember the last one that we actually traded, but the other guy that I just started to follow because apparently he is a huge ape is Trey. Let's see, where did I? You know who I'm talking about. So I'm sympathetic to the movement. Let's say that. I'm still critical of people not being aware that smaller traders will get hurt, but I'm a fan of what some people believe could happen, might happen, especially if there is positive, intelligent reform on Wall Street from the SEC. The last question the apes should ask themselves, and the one I've been asking repeatedly, is, will we always be able to find moneymakers with this strategy? My answer is no. You're not going to find that many short squeezes to build a career or to build wealth around, because they're such volatile. It's such a volatile play. If you're not also in it, like listen, if you want to do this with 5% of your money and hunt for these, great. Just make sure you're invested in the market too. And finding great companies. All right. I leave you with Richard Feynman, one of my favorite quotes, my favorite Feynman-isms. I have approximate answers and possible beliefs and different degrees of certainty about different things, but I'm not absolutely sure of anything. All right, folks. Send me your comments and questions. Keep an open mind, and we'll talk to you on Twitter and StockTwits. Thanks for joining me in the kitchen.